Hey, Job here. On this channel, I invest 100% of my income to create cash flow that will eventually replace my salary and pay for all my expenses. I do all this while living out of my Robinhood brokerage account by paying all my bills with margin. I've been doing this for over a year now, since the end of May 2025, and today we'll be going over the month 14 portfolio update since I started the strategy. I'm hoping that it brings me to an early retirement at 40 years old from the games industry. I'll go into all the details of my performance in July, breaking down how I massively underperformed the S&P 500 with my 6.62% total return loss, something like 80x plus underperformance there, so pretty bad. I'll check in on all my dividends received, the top line numbers, progress since I started this back in May, and update live my rough projections and goals on like where I'll land in the coming years. And then I'll finish it all off by going over all the expenses and cash flow from this past month. All that said, even as I massively underperformed this month, you'll get radical transparency. You'll see all my real numbers and nothing hidden. If you appreciate all this transparency, make sure to give a like and subscribe. As usual, just a quick disclaimer, this video is for entertainment and education purposes only. I'm not a financial advisor, and nothing here should be taken as financial investment or tax advice. I'm simply sharing my personal investing journey and documenting my own results. As far as my weekly flow chart of how I invest 100% of my income and live out of my brokerage, I'll just go over it quickly since it's kind of like the monthly portfolio update. So how it works is that my W-2 paycheck comes in, and so that's about $2,386 a week. So roughly 10.3K a month if you dole that over 52 weeks. And that all gets deposited to Robinhood banking, and I transfer 100% of it into the Robinhood taxable brokerage account. And so I invest that in basically two different buckets. So 10% goes to growth ETFs. So depending on what might be on a dip, I might get QQQM, AVLV, VGT, CLSE, SPMO, things like that. And any dividends that I get from that, I should get reinvested, not into themselves, but whatever is low. So it's not just a drip onto the same positions. And then 90% of the salary goes to high yield income ETFs. So I've been really focusing on generally safer yielders. So anything between the 10 and 20% yielders. So anything like XPAY, TSPY, TDAQ, MLPI, KGLD. And then occasionally I have been doing blocks and GIX and things like that as far as the ultra yielders, but I've been kind of avoiding things like ULTY, YMAX, and just focusing on the more safer yielders there. And so any dividends that I get from that generally deposit to cash and margin. The exception being is my weekly payers. Those actually get reinvested fully into the portfolio into safer yielders every week. But all the monthlies currently are deposited to cash and margin. So that's roughly at 5.4K right now and growing. And the idea here is that I'm investing my full paycheck. So I'm just kind of really growing my asset pool. And then what happens is that I'm taking that gross asset balance and then I'm borrowing against it every week to pay my bills. So I borrow at a 4.5% interest rate. And so I wish my mortgage was this low. My mortgage is actually 5.95%. If only I had room to just transfer my whole mortgage onto this. And that pays for all my bills. So generally my bills on normal months varies anywhere between 7 to 9K. The last few months have been a little bit more expensive due to wedding stuff, but yeah, generally it's that. And then as dividends get deposited, that basically offsets those expenses. So really what gets added to the margin balance month to month is really the difference between my monthly expenses and my monthly dividends. And as time goes on, this gap's getting smaller and smaller as I keep growing this monthly cash flow. And I just rinse and repeat this every week, basically. And I'm hoping this helps me replace my full salary with monthly income and then retire early by 40 years old in 4 years from now. So that's the rough flow there. And you can watch my videos every week to see this in practice with my full paycheck investing videos. And I give updates on this weekly every Sunday in my portfolio updates. So let's just get started with the monthly update here. So we pop over to Robinhood. So I'm actually filming this on August 4th today. So a very green day today, but we're actually not going to quite look over this just because I'm filming this a couple of days late from the end of the month. So I actually took a snapshot of where stuff was the other day. So July 2026, right? So I took this on 31st exactly. So we can see that my portfolio on that day was down 15.2K or 6.62% on the month. So it was a rough July for sure, went down quite a bit. If we compare it to the S&P 500, the S&P 500 was essentially flat. So when I say that I outperformed by 80 times, like this is basically what I mean, right? So take this, divide that by 0.08, 82 times underperformance against the S&P, which is pretty crazy. So, I mean, that's what happens. Sometimes when margin can really bite you as you get like successive down days. The margin amplification definitely worked against me this month. And But what was kind of somewhat encouraging to see is that, like, despite the margin, I actually almost kind of matched the NASDAQ. NASDAQ was down a similar percentage that month, so 6.14%. So in a way, if you looked at like probably my gross asset balance, I was probably down about half that amount, so like 3.3% or something. And with margin amplification, this is closer to 6.62. So in a way, I beat the NASDAQ in that sense, which is kind of cool, but that's where everything landed. So really see how like margin amplification can really work against you if you have like successive down days like we've been having. So ever since June, it's been kind of slowly going down. It's gone down a lot more in July here. So kind of hit our peak here at the beginning of June, and then it's just kind of like been a slow crawl down, and we're getting a little bit of a bounce back now. So I've been enjoying buying the dips here along this whole month, and then it's bouncing back up now. But we're obviously up a lot from the lows in March with the Iran war popping off. So we'll see. It could still drop, but we'll just keep buying throughout. And that's where the Robinhood numbers landed. If we check on my sheet here and actually check the top line numbers that we were at, so we can kind of take a look here. So I added the line here and kind of see we've definitely gone down in gross balance. So you can see the tops here. So I've gone down in gross balance with the underperformance in the month. Net value obviously went down as well because we're getting the margin bounce, addition pressure, and then also the market pressure. So my equity has also gone down some, so from 55% to 51%. My available for withdrawal went down as well a little bit, 2K. So this is in part because my expenses were higher this month compared to normal. You can kind of see that here. So this is a new column here that I had, my monthly withdrawals. So 10.6K instead of the usual 9,000. Plus, now that I'm reinvesting all my weeklies, that's affecting this a bit. So this will kind of affect it for a bit before it starts bouncing back up again once my monthly income keeps expanding. My margin buying power went down as well from 83K to 78 from month to month. Margin buffer on the full gross balance, that went from 30% to 26.5%. My net margin buffer went from 54% to 51%, and then 128.5K to 110.4K for the margin buffer dollar amount. And then my margin here went up by quite a bit, almost 13K here. So that's between like the extras, the weekly reinvestment of the dividends, and then also like I had some gift income or whatnot that I basically just like invested and then actually pushed back to the joint account with my wife and I. So those kind of all affected things. And then as far as the monthly dividend received, got $5,709.29. So not as much as last month, but definitely in the high end compared to what I've had in the last few months. So I've been gradually going up. And then if we kind of look at these in the charts, so we can kind of really see how it's been progressing. So we've been on a tear here with the gross value. It's gone up when we hit a peak at the end of June here, and then now it's kind of come down a bit, and then same as for the net value, and then it's come down. The margin balance kind of just ticking up, and this is as intended. It just keeps growing. Once I do reach and we'll see this when we go over the projections in a bit here, but once I do reach a point where my monthly expenses are covered by my monthly dividends, then any extra that I make will go towards paying down the margin balance. So then you should kind of expect that to start coming down there, but that's probably in a couple of years from now. As far as like the margin equity, the margin buffer, full and net, you can kind of see how that's progressing here. So it's peaked over here at the end of May, end of June, and it's kind of going down a little bit here. Margin buffer as well, kind of coming down. It's been going up steadily pretty nicely, but now with down market this month, and then also the margin kind of being layered on, that got eroded a little bit. Margin buying power coming down a little bit too, but not as fast as the rest, which is good to see. Available for withdrawal, just kind of, steadily going up. And then it's kind of been steadily coming down a little bit as I've been kind of doing more weekly reinvestments here. And then also this new chart here that I added, given that I have my monthly withdrawals here now, is my monthly expenses against my monthly dividends received. And so the idea is that when these two lines cross, that basically means that my monthly dividends are covering my monthly expenses and my monthly withdrawals. So once it reached that, I've kind of started to become work optional, and I'll keep building upon that until I get my gross value salary covered, and even more than that, ideally. That's a new chart there. And then we can kind of see how the monthly dividends have been progressing. So ever since I did my big rebalance in February, you can kind of see how this has been steadily growing nicely. So obviously the market has been going up too, but also it's been nice because I divested from a lot of bigger NAV eroders and things that were higher in margin maintenance, and then reinvesting into like a 10 to 20% yielders, which are a little bit safer. And that's been, you can kind of see that where it's like more steadily growing compared to where it was last year, where it's like very up and down, because I was in a lot of kind of more higher paying weeklies that were a lot more volatile. So this one building a more solid base that's growing better. So that's where the top line numbers are at. If we pop over to Snowball, we can kind of see how stuff has progressed on the growth. So if we lock in the month here, do that. So you can kind of see how much I underperformed against the S&P, right? So the numbers, again, will be a little bit different compared to Robinhood, but I consider Robinhood a lot more accurate, but this kind of just gives the general trend. So just over the month, you can see that I was like kind of underperforming for most of it. Do that. So you can kind of really see I was just kind of down quite a bit. And even here, it's giving different numbers, which is weird. But you can kind of see for most of the month, I was just kind of down compared to the S&P. So S&P stayed pretty flat, and then the successive red days, the margin amplification was really hitting. So again, that's why I always warn of like the risk of margin, right? Both on it helps on the upside, but then that amplification also bites you on the downside. Right? And as far as the heat map for the month, if we isolate to July as well, we can kind of take a look here on what got hit the most. So you can see that Chippy was definitely the big hitter this month, down 20%. SPMO, so momentum got hit a lot, down 11%. XPAY stayed flat because it followed the S&P pretty well and outperformed by just a little bit. VLV, fresh new position that I added midway through the month by divesting from SCHD, so that kind of stayed pretty flat, which is good. QQQM down 6.5%, and TDAQ actually down a little less than QQQM, which is good to see. CLSE stayed relatively neutral, or went up quite a bit, and actually I'm going to go over this in the video on Sunday, but I actually sold out of this week, and we'll go over why. KGLD stayed flat. ULTY went down quite a bit as well, same for YMAX compared to VU. GIX went down a lot too, just across, it's VU, mid cap, small cap, and then also just it has some single name tickers there that probably affected it, like MU and things like that. MLPI stayed relatively flat, I guess, with the war footing. I remember it was up and down, so it kind of evened out. TSPY actually outperformed VU, which is interesting to see, that by quite a bit. So that's cool to see. Goop down a little bit, so that's my Google income fund, and that I reinvest all my YouTube income here. BCAT stayed relatively flat and actually beat out the S&P, which is cool to see. ILT beat it out as well. And DRAM down a lot too. That was one of the big hitters. I think like Chippy and DRAM were quite affected by the Korean stock market, as I talked about in last Sunday's video. So that's how things are looking on the month there across all the positions, and OVL here too went down more than VU. So OVL, that's kind of like as designed, right? Because it's using put credit spreads, is that it does have uncapped upside, which is great, but it will get hit harder on down days. So you really saw that between VU and OVL this month, how much that got hit. So that's how the month's looking. And as far as the dividends, if we pop over to the calendar here, can switch back to July. So this changed a little bit just because I changed some positions around today. So it actually removed some stuff, which is not great. But ended up getting $5,709.29 in July. Actually, today, preview again of Sunday, I sold out of KCOP and consolidated to KGLD. So it changed things up here a little bit. And it removed KCOP, which I got, which shouldn't do it, given that it's, I still realize those dividends. But anyways, so you can see all the dividends I got every week. So at this point, generally almost making about 1,000 every week. And then also this was like a 5-week month too, which was nice. So 5 weeks of dividends, which was great this last month. So I'm going to go through every week here, but you can kind of see it visually, right? So a little bit over 800 on the first week of July, a little over 1.6K on the second week here, a little over 1K on the third week, a little over 1.1K on the fourth week here, and then just a little under 900 on the last week of July. So good mix of like weekly income. So ULTY, YMAX, Chippy, Blocks, GIX, those all get reinvested to the portfolio. And then anything that's monthly income that just deposits to the portfolio. So that's all the dividends for the month. If we dive in a little deeper for yield on cost and all that stuff. So you really see that ULTY, YMAX, right? You really see the yield erosion at play here. It's happened a little bit for blocks and BTCI as well too. But you can kind of really see this middle portion here. This is really what I've been focusing on as far as like investing on my high yield income lately, and specifically this year. And you can see that these, even though as they've eroded a little bit, right, they still kind of hold up their yields nicely and their NAV holds up nicely. and they make up a much more solid base to build the income on. Whereas like ULTY and YMAX, you can kind of see, I went heavy into them last year, kind of learned my lesson there, but you can see how like all the capital I have invested is yielding closer to 32% and closer to 22% for YMAX, just because it's come down quite a bit. Like an unrealized side, it's come down like 43%, 39%. So things to keep in mind. What I'm doing with those right now is just reinvesting all their dividends into safer yielders there. And that's how I'm kind of offsetting it and not necessarily selling out of them just yet. We'll see if I end up doing that. But for now, I'm just kind of taking their dividends and reinvesting them elsewhere. And then we went over this a little bit on Sunday, but just again, you can see we beat out last July's dividends by quite a bit. So by over 1.3K difference here. But we've been beating month over month every month from last year. So this is great to see, and you really see the system at work. It's not just kind of staying flat in payments. So you're really seeing all the capital going at work. So I'm compounding both on NAV value and then also in dividend income year over year. So you can kind of just see that visually there. I think we're going to have trouble more in August, like I mentioned, and October here, but I think the other 3 months I should be able to beat these pretty handily. So excited about that. And that's the dividends. We pop back over to the spreadsheet, we can kind of go over the goals tracking and see where we're landing. So I'm using the updated version of the sheet that I did last month, where I'm basically kind of factoring in the extra monthly dividends that I'm reinvesting from the weeklies. So it's just about 3.4K a month roughly right now for the weekly dividends. And so I just wanted to cover that, to just kind of help factor that into the rough projections and where that might land. And these are the goals as a reminder that I'm kind of targeting. My extra net paycheck covered at 5.3K, my monthly expenses covered at 9.1K, net monthly salary covered 9.7K right now. My gross monthly paycheck roughly 14.5K. Actually, I think I need to update this a little bit. 52 divided by 12. Yeah, so it's actually closer to 10.339 for net monthly salary. Yeah, I actually think I need to update these numbers. I'll have to do this for next month, but these are a little bit off compared to, because these were based on some of my old numbers before when I was contributing to the 401k. So I'll actually need to update these, but we'll just go off these for now for this month still. So extra net paycheck covered, we actually covered that last month, and that's still pretty covered. So this is a goal accomplished, right? So that's a check mark on that. As far as monthly expenses covered, this is actually coming up earlier, which is good to see. So this is going from November 2028 moving up to September 2028 for dividends. My net monthly salary, this is covered. Gets covered a little bit earlier as well too. So this moves from March 2029 to December 2028, which is great. So you can kind of really see like the weekly dividends kind of at play and kind of helping bring these forward, even though I had like a down month here. Gross monthly paycheck covered. So this goes from March 2032 to July 2031. Great. So moving that up as well. And then margin paid off. That doesn't quite happen. I haven't kept running the projections here. I probably continue this, like maybe do that for next month. But I don't think I'll ever have my margin fully paid off though, to be honest. I'll probably, once I reach like 70, maybe even 60%, I'll just kind of try to keep it at that level. Just be reinvesting the extra towards growth or maybe more high yield, and just keep that margin at a certain level, just because I've been getting more comfortable living with that. So we'll see when we get closer to that, what ends up happening. But you can see here, so I updated my numbers from this week. So similar numbers that we were talking about earlier. So all the same portfolio value, net equity, margin debt, all that. From there, a sheet will project where stuff is going, right? So if we go towards once I'm 40 years old here, where I'd end up potentially, I'd be at 1.15 million on the gross portfolio value, 710.9K in net equity value, and 448K in margin debt here. So that would be roughly 61.32% equity. So I'd be at 12.7K a month in average monthly dividends. So pretty well covered as far as my monthly expenses and my net salary, but not quite covered in gross monthly salary. So there's still a little bit of a gap here that I'd want to make up. So either I just kind of keep going until I do it, or I can kind of make some tweaks now to potentially kind of hit that faster. And I'm still mulling that over, honestly, just because I'm still targeting this 40-year-old date. Potentially, what could happen is that maybe I'd go a lot more aggressive and I invest all my dividends just to kind of really push it forward. This is not quite all the dividends here. I'd have to rerun the projection there and just have that sheet just available to show. But if I did like 5.5K, you can kind of see the difference here. For example, like if I went between this and the 5.5K, you can kind of see how I might be at 17.2K by 40, but then my net equity would actually be higher, but my margin debt's a lot higher, right? So I'd go from 448K in margin debt to 709K, and my equity would be at 53.82. So that might be a thing. Another thing I might maybe consider is maybe I do make the big jump to potentially sell all my growth here and then just reinvest that into kind of like something like, say, a mix of TSPY and TDAQ. If I even want to go even more aggressive, TDAX and T6. And that would kind of help bolster up the income from now for where I am. And then we can keep building on that. Just because, like, say right now, I don't know, let's pretend, say we take everything in growth. So this is just really aggressive, but we'll just do the exercise here. So 458 times, let's say 20% yield if I mix it between TDAX and T6, let's say. So this would be this much in annual income, divide that by 12. That would be adding $3,207 a month to my monthly income. So plus 5437, 8644 per month. So say I did that tomorrow, and then let's say I updated my last dividend here. We can kind of project from there, and we could see that how that might affect things, where that would actually bring me over my gross monthly paycheck, just above it by 40 here. So bring me to 15.9K over here in monthly dividends by 40. So that could potentially work, but yeah, not quite ready to do that big jump yet. Maybe I just want to keep that in my back pocket and just kind of keep growing my growth here. But yeah, maybe even if we, in this scenario here, right? If we pretended it here, this 22.8K. So this is like the most aggressive, really. You can kind of see that the margin debt would actually stay relatively okay here. But then this has grown a lot more too. But we'll see. I need to mull this over, honestly. Because it's definitely going on a more aggressive tilt, and I'm already pretty aggressive. So that's something I'd have to think on before I ever kind of pull that. Just because this one gets in tight territory here as far as like how much the cash available for withdrawal eats up if I push that much more, and then my equity percentage gets close to 50% here. It could potentially work. We'll see. So I'll have to think on that, but something to put on the back burner here. But definitely, I think that the main thing to note is that right now, with the current trends, not going to quite hit over my gross monthly salary for 40, right? Ideally, I want to be, ideally 2x would be great, but I think that'd be quite a bit to reach that, especially if I want to do the safer yielders instead. But yeah, even if I get like 1.25x or 1.5x, just to kind of get a little bit of buffer in case like stuff drops, that's we'll have to see what I do to kind of adjust things from here. But I'll think on it. But that's for the numbers. If we pop over to Monarch, all right, so if we go to the July expenses here, so it was a busy July. A lot happened, of course. I got married, had some family over during the month, and then we'll also just go over a month-to-month sheet here as well, just to kind of look it over and compare and contrast. Just because I'll show things a little bit differently based on the expenses. So July, so big month, right? So brought in 21.8K in income. Had 11.6K in expenses, so quite a bit more. A lot of that was driven by like the wedding stuff, having family in town. But despite that, because of all that income, right, still ended up saving over 10.2K net after expenses. So 46.8% savings rate. So, you know, this is almost pretty much the difference that gets added to the portfolio after all that income, given that I'm investing the full paycheck and everything. So 11.9K of that was my W-2 paychecks. 5.7K of that was my dividend income. This one's a little bit different just because it includes some income from my taxable joint account. My gift income, so this was some wedding gifts from my parents-in-law, and then also some friends that started giving us stuff ahead of our reception in a few weeks here. Business income, so this is all the YouTube-related income that came in. So $600 there. Rent income, $500. Dividend income from retirement, so $167. Cash back, so from my gold card, and then also my Fidelity, $74. And just a little bit of interest here from the Irish banking, $6. So a lot of income this month, which is great. And then as far as the expenses, so it was an expensive month. My mortgage came out. So this is lower, as I've mentioned, since I don't have an escrow account anymore. I actually had to pay out my yearly home insurance. So now I'm paying that all myself instead of through the escrow. So that was 1.5K that came out. Went out a lot to eat this month, so 1.4K. And this is really just meals between my wife and I, pretty much. Financial and legal services. My wife and I were doing a post-nup, so I actually had my first meeting with the lawyers this month. So that was 1.1K for the initial work that they've done there. And we're hoping to wrap that up in the next few months. Hosting and party, this is really just all the wedding related costs that came in. So I had to like pay for the photographer for a wedding day. This is a little dinner that we had post wedding day with the families. So $771 went towards that. And gifts, this is actually those dinners and stuff like that with my mom and sister. Groceries, that was like $595. That's just like just regular groceries for the month. Travel airfare, we actually booked a trip to going back home to Canada later in the year. So booked our airfare for that. Entertainment and recreation. This is just kind of, I don't know, I love collecting 4K Blu-rays and going out to do stuff. That all falls under there. Water, this is our bi-monthly water bill, so $373 every 2 months. Pet food and supplies, that's just like just for dog and the cat. Coffee shops, this one, as I mentioned last month, has been a new expense just because I've been going to a new coffee shop that opened. Basically, the perfect distance from my house for a 15-minute walk back and forth, which is perfect for my half-an-hour walk that I do in the middle of the day. I kind of missed that from when I worked in office, so I kind of get that at home now, which is nice. Medical, this is just some bills that came up from going to the doctor. Now that I'm on a high deductible plan with an HSA, I'm paying for all that out of pocket. Household items, just like random stuff bought from Amazon for the house. Parking and tolls, and ended up getting a parking ticket the other day. I was really dumb. I ended up parking in a spot. I totally blanked on paying for the thing, and I came back 2 minutes later to do it. And then the parking guy had gotten me, and I was like, that's one of it. I was like $85 there, but the rest is just normal parking stuff in Seattle. I just don't like having to look for parking for forever, right? Gas, $147. Internet, $124.97. My internet is actually going up next month, and actually going to switch. I was with Xfinity for the longest time, and now I'm going to switch to Ziply for people that are in Washington. And then I was also doing my home security through Xfinity, but now I'm going to switch to Ring probably too. And then between that, it's still going to be cheaper. It'll be like $90 a month between the new home security and Ziply internet. So it'll be a lot cheaper because they're raising this from $124 to $146 a month, which is not great. So even after I called to have them lower it, that's the best they could do. So goodbye Xfinity. And then gas and electric, $105. That's per month for electricity. Pet insurance, $103 a month. Auto maintenance. Yeah, I just had a couple repairs to do to the car and still have to do. I'm actually getting some bigger repairs to do this month, fixing my headliner, and actually I'm due to replace my brake pads and stuff like that. So yeah, I have an older car from 2013, so got to keep up with that maintenance so I can kind of make it last as long as I can because it's paid off. I don't want to get another car until this one just takes a crap. Furniture and houseware, just some little things we bought there. Charity, ended up donating to one of the families that was unfortunately affected by a Bite of Seattle shooting that happened a week ago. So yeah, I did a GoFundMe for that. Pet grooming, just groomed a dog every month and a half here. Phone bill, $43 with Xfinity. Fitness, this is my monthly DEXA scans, just because I've been really focusing on weight loss. So it's been nice to kind of just see that I'm actually targeting my fat percentage and not losing any muscle, which I haven't, which is great. And subscription, so just like streaming services, things like that, just $33 a month, and pharmacy, pills and things like that. And then I think last month I was mentioning that I returned some of my wedding suit stuff because it went on sale after I bought it. So I ended up sending it back to get the discount on the parts that I could. So that got back $397 for that. But that was the month. So definitely an expensive month. August is shaping up to be just as expensive, if not more, just because we have the last of our reception payment to pay and those auto repairs coming in. So it just happens that these last few months have been expensive with everything going on, right? But the system's able to accommodate that. And I have enough buffer in my account that I can handle that, which is nice. So that's the expenses for things. And then a lot of these expenses, because most of these are on credit card, I'm only going to pay for this like in September. So that's why like when we switch over to here and kind of see what came out in July, is actually only 10.6K came out of the account in July, because this was basically like bills from the other month. So see here, the estimates for next month's already 12.3K, so quite a bit, big jump there. So that's why there's a bit of a difference there, and things are delayed between the cash flow of what's spent that month and what comes out on the current month. So, but all in all, Definitely net add to the portfolio is like 11K, right? If you factor out, this is just covering the taxable brokerage. So 10.6K that came out in expenses across all bills. And then between everything that got added to the portfolio, between the paycheck, the YouTube investments, taxable dividends, the gift income, that's actually 11K net that got added to the portfolio. And actually one thing that I'm mulling over, just because I've been wanting to pay down my HELOC a lot more, because right now it's sitting at like 54K out of 66K limit. Kind of want to pay that down ahead of potentially buying a house in a few years with the wife. So I might maybe, like, given that I have like so much extra when you look at these months, so at least at a minimum I have like 3,000 extra that gets added to the portfolio. Maybe I add 2-3K of that every month to the HELOC. So it would push up my expenses, monthly expenses, but it would be going to the HELOC, create more room there, and then also could act potentially as an emergency fund, push comes to shove. But still thinking that through as well. So a bunch to think through this month as we're kind of looking at the numbers, right, and reckoning with them. But that's where everything is sitting. So I hope you appreciated a good view of all that. Always try to be an open book with all my numbers, and just a weekly flow that I use every month and every week. So hopefully you appreciate that. If you're interested in the spreadsheet, like I mentioned, you can always find us on Gumroad for $5. My Snowball portfolio, you can see this for free. As always, this is not hidden. You can see all these real numbers that I go through every week. Just check the description below on any video. So, and if you're ever interested in our Discord server, that is now paid. So you can access it by joining either the YouTube or Patreon membership for $3 a month. So great little community of like-minded investors. A lot of other people living in their brokerage and a lot of good back and forths and people learning from each other, and everyone's doing it a little bit differently. So you can really kind of pick and choose what works for you and bounce ideas off people. You don't have to, you're not just relying on me, which is nice. I think the more sources you're relying on, the better. Get a good picture of what you like doing and what works for you. So everyone's situation and goal is different. So if you want to catch up on my last full paycheck investing video before the new one dropping on Friday, definitely check out the one in the bottom left and drop a like and subscribe if you appreciate all this transparency. Peace.